Hello, good evening, good evening. Okay. We are officially on all of our social media. I want to say hello to everybody out here on YouTube and Facebook and the Twitter. Don't forget to give us a thumbs up, give us a like, all of that good stuff. Everybody in the chat, welcome. Tonight's conversation is all about wealth stacking and the art of wealth stacking. And we have two wealth stackers here to help us. The first is Dr. Cherie. She is the 10K economist. She comes every quarter live with us in order to talk about the economy. And we got the CPI inflation numbers. So I'm sure she's going to talk about that. She has other stuff to talk about. More importantly, we talk about how you can navigate it and how you can still win in the process. And we also have Andrew Glaze coming to talk about wealth stacking itself. He is the CEO of a company called WealthStack, and he has done a Bet on Black pitch with us, about a month ago, Tawana, something like that. It's been about a month
ago. Mm-hmm.
Yeah, so anybody who has participated in the Bet on Black pitches, whether you came live, did a replay, you got to see Andrew. But today he is coming just to talk generally about wealth stacking. And he did confirm with me, so we know that he will be here this evening with us as well. But since it's 6:01, let's get started officially. Welcome to the 10K Project. We're the largest community of investors who actively fund Black-owned businesses. The primary way we do that is through something called the Bet on Black pitch. Every Tuesday at 8 p.m. Eastern time, we invite a Black entrepreneur to come to our community in order to present their business to us. Excuse me, everybody. And we call that a Bet on Black pitch. The entrepreneur will present their business to us. And then we as a community has an opportunity to ask that entrepreneur questions. And then if you like that business opportunity, you are able to invest in that business. Investments are oftentimes as little as $100. And these investments are governed by the Securities and Exchange Commission and FINRA, so they are government regulated. It's done through a process called equity crowdfunding. Outside of that, we have so many other things we do within the 10K Project. We have our wealth building series. We have a lot of information in our knowledge center, everything from how to start a family bank, how to invest in hotels, how to buy tax liens, and all sorts of information about alternative investments, how to buy businesses, how to start and grow your business, different careers you're able to get into, etc. And we have our expert directory as well. So everybody's an expert in something. We ask that you add your information to the expert directory so that when either one of our Bet on Black presenters is hiring, or someone within the community needs your product or service, that they can easily go into that expert directory, type in your search keywords, find you, and reach out to you directly. So, Tawana, what else did I miss?
I think you covered it all. The10kproject.com if they want to know more.
The10kproject.com, absolutely. Okay, then. And Andrew, welcome. I see your beautiful face here as well.
It's so good to see all your beautiful faces today.
Yes.
Definitely the highlight of my day.
Now, the chat is super quiet today. I'm used to y'all putting in your city and state. What's going on? Talk to your girl. Put a 1 in the chat. Put a 1 in the chat. Let me just make sure everybody could hear us, see us.
And I'm representing Brooklyn, Bed-Stuy. Hope there's a couple out there.
Or maybe it's my chat that's not working. I'm not seeing anybody's messages come through.
Yeah, we don't see anything in the
We don't
chat.
see anything. Talisha,
Oh,
text
it says
us
the
if you're
chat is
trying to put
disabled.
something. It's saying it's disabled. No wonder. Okay. I probably will need to fix that then while, if I can, in midair. Why don't we get started with the information for today, and let me see if I'm able to fix this. If not, then, I apologize for that.
The Q&A is working. So if the chat doesn't work,
Mhm.
then put your comments in the Q&A, comments and questions in the Q&A.
Okay, perfect.
There she is, Madam CEO, solving problems.
So, we have two guests here today. So, Tawana, actually, what I'd like for you to do is introduce yourself to the community, make sure people know who you are. And then if you would toss it over to Dr. Cherie to present her information for the evening while I figure out this tech issue, that would be great, please.
Wonderful. So my name is Tawana Rivers. I'm the Chief Operating Officer here at the 10K Project. Super excited to have you all join us. If anyone is new here this evening, welcome. We hope that the information you gain here this evening is going to help you on your journey to wealth stacking. And we'll hear more about what that term actually means and how we can all prepare for what's to come and start to feel an easiness. My hope for this evening is that at the end of this discussion, you all feel an easiness as we go into this journey of wealth building and the impending recession and all of that, and that your nerves settle and that you feel like you are equipped to get to the next level successfully, and that you find a community, if you haven't been a part of this one, you find a community that you can come back to that allows you to continue to feel even more comfortable as time goes on. So that's my goal for you this evening. And I'm gonna leave it up to Dr. Cherie and to Andrew to get us there because they are the experts in this area.
Mm-hmm.
And so Dr. Cherie, I'll hand it over to you.
And the chat is now working, everybody. The chat is now
Wonderful.
working. Thank you.
Great, thank you.
Good evening, everyone. That was an excellent segue into the information that I'm going to provide, because basically what I want to do is talk about three different things about what you would be hearing if you're paying attention to the news, what you're hearing, and then I want to explain what it means so that you can make better decisions. And then hopefully that will be just enough of a pop-up for Andrew to come in with the wealth stacking. So my job tonight is primarily to inform you of what you're hearing in order to calm you down. Because if you're listening to the news right now, it is, what is that childhood fable, the sky,
Chicken Little.
The sky is falling.
Chicken Little,
right?
Chicken Little,
Yeah.
the sky is falling. And so if you're paying attention to the news, it sounds as though Armageddon is before the year is out, and, hide your wife, hide your kids, stack up and do whatever you got to do because it's here. And so what I want to make clear for you all is that even as it comes, we know what hard times are. And when you hear that panic, it is because it's coming from those who have not experienced those hard times. We've known hard times and we've known how to manage through it. And so I want to make sure that this time, as we manage through it, you're managing it through it with some knowledge, and above all else, with some wisdom and understanding. So let's talk about, what are you hearing in the news? So the first, you're hearing probably one of two things. You're either hearing a lot of talk around the GDP, or you're hearing a lot of talk around the consumer price index or the CPI. And we're going to talk about both. Previously, when we talked about the GDP, remember I told you that GDP is gross domestic product, and that is how we measure the economy. So we look at household spending, we look at government spending, we look at business spending, and we look at international spending. And we pull it all together and we see that, in some areas we'll see some spending and increase in spending and decreasing spending, and we take all of that in total, and then we see if that number is up or down from the last period, the last quarter. And then remember, I told you that if you see 2 or 3, depending upon which agency, which group of economists you're looking at, it can be 2 quarters, or for some groups, it's 3 quarters of decline in activity, then we say that it's a recession. And so the numbers came out for second quarter 2022. And again, those numbers were down. So we were down a little bit in the first quarter. We were down a little bit in the second quarter. However, there are groups of economists that are kind of saying, yes, two quarters of decrease or declining GDP, we would normally say that we're in a recession, but they're hesitant to do so because in addition to 2 successive quarters of low or declining GDP, we also have inflation. And then in addition to inflation, the other thing that I want to talk about, which I'll talk about later, is that the dollar in currency markets, the dollar is gaining strength. And so when you have all of these different things going on and we're still kind of mapping our way through the supply chain, there are economists that are hesitant to say we are in a recession. Because the minute you signal, yes, we're in a recession, that sets off a chain reaction of behaviors that will take the recession even deeper. And so we really don't want to do that as economists, because there are global implications. And then there's within the US, there are not only social and economic implications, but there are political implications as well. And so yes, we've got 2 quarters of declining GDP, which would technically mean we're in a recession, but economists are hesitant to say, yes, we're in a recession. They're saying, okay, let's wait 1 more quarter and see what happens, because we don't want to cause panic and alarm. And even in being hesitant, if you're paying attention to Wall Street, you're seeing that the stock market is just going berserk and is very, very volatile right now. But that's another reason why economists really don't want to say that we're in a recession. And it's kind of like, well, we've talked ourselves into it. Well, no, remember, I told you all, this is cycles, and you have upturns and you have downturns. It's not a matter of if it's going to happen, it's when it's going to happen, and are you prepared? And so we've got 2 quarters, GDP is down, but here's the other juxtaposition. Here's the other kind of, why is this not working? Why does this not seem like textbook recession? And the reason why it's not textbook recession is because consumer confidence is strong, meaning that even though in the media we keep hearing recession is coming, recession is coming, recession is coming, spending hasn't changed. Consumer spending, consumption has not changed. Now, part of that, it is not because we are households are increasing their spending or increasing the frequency of their spending. It is because of inflation. So yes, if I hear, I'm sick, I hear the signals, this recession, so that I'm going to slow down my spending. Well, no, we're not seeing that because households are still buying staples. So even if households stop spending on luxury items, or those goods that, instead of getting top quality, I would get, some more inferior product. That is what's happening. But the staple goods that we would buy regardless of the economy, those prices are going up because of inflation. And so because those prices are going up, from our perspective, it looks as though consumer confidence is just doing this, whereas we would expect consumer confidence to kind of fall. And so
Dr.
it's not
Sheree,
falling. Yes.
Yeah. So I also heard that they expected people to not take their vacations this year and not take as many vacations, yet the hotels and the
Still
airlines and
booked.
all of them are like saying
Still
they,
booked.
yeah,
Still
like
booked.
nothing has changed for them. Now, that could have been pent up demand from COVID as well,
Yes.
but um,
Did it.
but there are industries that expected to already see a slowdown that are not seeing this slowdown at all, is what I've heard.
Exactly. Exactly. And and again, that's because households are thinking through the things that we used to think were luxury items are no longer considered luxury items. So like the travel, you would expect that there would be a decrease not only in hotels, but you would expect to see a decrease in air flights. It's still going strong.
Yeah. And
And
they have
part
to
of that,
beg the pilots now to like do
exactly,
like extra. It
exactly.
wasn't Delta that had to like offer more for pilots and all of
Yes,
that.
yes,
Yeah.
yes, yes. And so you've got, you have travelers that are like, we've been cooped up for 2+ years. We've been planning this. And also remember that, whereas in the past, you had travel arrangements and they were like, okay, we will postpone it. Or if we understand that because of COVID, you couldn't. And so we kind of give you that credit. Well, that credit is expiring. And so it's kind of like a use it or lose it kind of thing. And so if because it's use it or lose it and they're not going to extend it anymore, I'm going to take the flights, I'm going to go do the hotels, I'm going to, even if I didn't travel, I'm going to make short trips as opposed to the long big trips. And so hotels are still, you're not going to see any difference because again, they were operating at a low level in terms of having staff in place and things like that. So you're not going to see, again, this is consumer confidence. What you're seeing is consumer confidence. So yes, I hear that as a household, I hear that we're going into recession. Well, here's the deal. I've been cooped up for 2 years. Guess what? Let me get this in before everything goes to hell in a handbasket. And so consumer confidence has been steady because you've got that kind of thing going on. And so then you've got consumer confidence is up, and it doesn't matter. And inflation aside, it's still there. It's still there again because we're coming off of a pandemic and all those credits that they had been extending and pushing back. Now they're saying, listen, use it. You have until December 31st to get it done. Get it done. And then also airlines. Believe it or not, airlines are also offering specials. They're off, despite the fact that they have a shortage of pilots. They're offering, if you're a frequent flyer at a certain status, you'll get an email that says, guess what? We've reduced our fares for these locations if you book now for, a later date. And so all of these things are coming together again because they're trying to recover from the pandemic and trying to make sure that they hit their projected or forecasts for profitability. And so they do what they do. Households are saying, okay, households, we can always, and I've said this before, we can always depend on households to spend. If they have it, they're going to spend it. And so this is another reason why consumer confidence is high and
What do you
is
think?
strong.
What do you think about Mitch McConnell saying when people finally spend their $1,400 stimulus check, then the economy will turn? Did you hear that? Did you hear he said that?
I did not hear his actual quote, but I have
Mhm.
heard,
You
I've seen
read
the
it.
clips of it, and
Mhm.
I just sit there and I'm thinking, okay, clearly you did not pay attention in the
Yeah,
econ class,
he's out of
and
touch.
or the people that are around you,
Mhm.
either you're not paying attention to them or they are not the voices you need to be listening to because yeah. But we've seen a lot of people, just because you stand in front of the mic doesn't necessarily mean that you have the best information when you stand before the mic. So
Yeah.
yeah. Now, we've talked about GDP. We've talked about consumer confidence being strong, and we know this to be true, not just because we're not seeing any change in spending, but the CPI, the Consumer Price Index, has, whereas GDP has seen a decline, CPI, the Consumer Price Index, has seen an increase this past, when they did this past month for June, and then overall for the second quarter. And remember, I told you all that Consumer Price Index, that's from the Bureau of Labor and Statistics. They take a basket of goods and then they go from country to region within the country, within the US, region to region, and they say, how much does this basket of goods cost? And so, and then that lets them know, you know, these are what households are willing and able, because that's demand, willing and able to pay for this product's basket of goods. And so the number was positive, it was increasing. So that is the quantifiable way of saying consumer confidence is strong. So yes, we have all of the evidence of a recession, but households are still spending money. And they're spending money because they have a reasonable expectation that I'm either spending it to prepare or I'm spending it to maintain. And so consumer confidence is strong. And then the last thing that I wanted to talk about, you're going to hear about the dollar. You'll hear something called like the dollar is surging. And that means that when you look at the US dollar, the currency, the US dollar as an investment, the value of it has increased. So not only do we have inflation, remember I said the prices are rising, but that inflation is local in terms of what's going on in the US. When we step outside of the US and look at what is the dollar doing when we compare it to other forms of currency like the euro or the Chinese yen or the Japanese yen, when we talk about these other currencies and we compare the US dollar against it, the value of the US dollar is gaining. As at the time of this recording, the US dollar and the euro are pretty much 1-1. Whereas before, you would need more than $1 to get €1. And so what does that mean? So if you are, and I mentioned this in the, I think the monthly, the last monthly, so for those who have paid, when you see inflation, remember I told you that with inflation, you spend the same amount or more for the same basket of goods. And so as a spender, inflation is bad. And then we connected inflation to interest rates, because as inflation was rising, the federal government, namely our president, went to the Federal Reserve Bank and said, listen, you need to do something, fix it. And so the Federal Reserve Bank, the central bank, said, we're going to raise interest rates. And so when they raised interest rates, the reason they did that was so that we would stop spending, that we would have less dollars circulating in the economy. And that would hopefully bring down the prices for those goods and services. And it did a little bit, not as much as intended, but it also had another consequence. And that consequence was that in the global markets, then that made the US dollar more valuable. So those who live outside the US who invest and invest in the dollar as a currency, they're doing well, because now it's good for them. Now they're getting a more positive return on that investment. For those who are borrowing, it's not so good, because that means you're paying more for the amount of money that you borrow. If you are saving, it is good, because now you're getting more the return for your savings is good. So now you're getting more. If you are borrowing, again, I said that's not good if you're borrowing. It's good if you're saving. It's good if you're investing. If you are traveling, if you're traveling outside of the US and you are using US currency, it can be a good thing for you when you're traveling. Or if you, as an entrepreneur, you're in the travel industry, it could potentially be a good thing for you that the dollar is gaining strength. But if as a business in other areas, other industries, it might not be such a good thing because it means that it's going to cost you more to do transactions in those other countries. And so when you are, I'm sorry, it will cost you more here, but then when you go abroad, you should be able to buy more, but there are increased costs because the dollar is stronger. So you have a combination of different things going on. Technically speaking, we are in a recession. It won't be declared that because, again, there are ramifications. There are market ramifications. There are political ramifications. There are global ramifications once that announcement has been made. But in addition to that, you have inflation, and then you have a strong dollar. And so as households, you have to decide, okay, am I still spending? Remember, we talked about the consumer confidence. So even as I'm spending, I'm thinking about what am I spending my dollars on? What goods and services, what investments am I saving? How am I distributing the money that I'm getting? And then how can I distribute it so that it benefits me not only in the immediate, but also down the road? And so you've got a strong dollar, we've got the recession, we have inflation, and all of that comes together. And as it's coming together, making note that, listen, we've been through this before. We've been through recessions before. This is nothing new. And we've weathered that one. We will weather this one. Now it is how weathering it differently so that when the economy rebounds, we are rebounding from a higher, much better position.
I agree. I wanted to suggest to people that sometimes the issue is you're not making enough money, which is why for the past few weeks, I've been inviting people on to talk about different ways that you can make more money, either full-time business, part-time business. We've had people come in and talk about how do you buy businesses because they're already cash flowing, and Tawana can talk about that a little bit more. So you're able to buy into a business, and you're able to buy into a business with none of your own money, and have something that is already bringing in cash. We have more people coming on to talk about that. I just want to encourage people now, if you feel really stressed, look at, are you truly maximizing the income coming into your home? Don't be afraid now, and I say this with caution, to think about monkey barring into another job. I've started seeing information from different resume writers that are helping people get $20,000, $30,000, $40,000 bumps in salary because they are currently underpaid. And when they fix their resume, fix their LinkedIn, figure out what to say to the interviewers, they're able to increase their income. So, I just wanted to put that out there as well. I'll open it up to the rest of the panel for what your thoughts are.
Yeah, I'll just jump in real quick. Cherie, you're right. It's making money is making more money is definitely something people need to think about. And then also, the investments that people are making. That needs to be something that they sit down and strategize as well. I see Latoya put something in here about I-bonds, and I know we did a session with Kamari Ellis recently where he explained I-bonds. It's funny because since that session with Kamari, I've seen like 5 sessions across the financial planning kind of industry where everybody's talking about it now. And so, that's definitely something we need to think about, and looking at the library of information that we have is going to get people closer there. But you mentioned the buying businesses, there are I-bonds and buying businesses and getting a return on that. There are ways out there to make more money, right? I think we have to remember that. So even in this recession, all is not lost. I recently started a micro private equity firm, and we buy businesses, and we're giving our investors very favorable rates still, right? That has not slowed at all. Actually, it's actually picking up. And so, you just have to have the right information. That's why we're all here, right? To help you better prepare and be informed so that you know what options are out there. And so, Andrew, what do you want to add to that?
Unmute yourself, Andrew.
Oh, you're on mute, Andrew.
You couldn't have set me up better if you tried. I got some great ways to create wealth that I've been working on while listening very closely to the good doctor. And you were spot on about the issues and all of it. That's so much turmoil. And so, but there's also a lot of opportunity out there. And I'm going to spend my time, I'm an Excel guy. So I'm going to walk you through some Excel models that help you think about home ownership and some of the ways that there's wealth creation available there. I'm also going to talk to you about my company, WealthStack, which has a affiliate rewards program, which would allow you to earn money for signing up businesses for WealthStack, certainly hundreds and thousands, and maybe even tens of thousands of dollars per month as a revenue stream. And so happy to talk about that as a little bit too. And so a little bit about myself. Wow, they're signing up already. I'll go ahead and post the link.
I was going to say, put that in the link, put that in the chat.
Go ahead and post the link.
That's right. And remember, Andrew, some of these members have also already, they watched your pitch. And so we signed up as affiliates during that time as well, when you told us all about WealthStack the first time around.
Yeah, no, it's really appreciate the support. It's been, I've done a lot of hard things. This has been by far the hardest. And so Jamaican immigrant, grew up in Bed-Stuy, went to West Point, served in the Army for 5 years, including a year over in Baghdad with First Cav. Came back, went to Columbia Business School, full scholarship from Merrill Lynch, which is great. Investment banking at Merrill Lynch, working on leverage transactions and deals. My first deal was Campbell's Soup selling Godiva chocolate, which occurred in the summer of 2007. They sold it ultimately for $325 million to a private equity arm. And so we were part of a bidding group, and that was my first exposure to it. And I learned all about leverage and loans and transactions. I went on to start my own hedge fund in 2009 when Merrill Lynch fired all of the Black people. They fired half of the white people during the merger with Bank of America, but they fired all of the Black people. And honestly, it was the single greatest gift they ever gave me, including the free Columbia Business School education, because I set out and I began building on my own. I started my own hedge fund, grew that to $40 million in capital, then left, joined a $500 million family office as one of 2 investment professionals, where I was able to pull my stubborn boss into PayPal when it spun off from eBay at a price of $30. It peaked 5 years later at $300. An investment in PayPal is how I made the preponderance of my own personal wealth. And so to that, joined a private equity firm called Standard General, $2 billion they own, with 4 investment professionals, learned all about structuring deals and getting ownership of leveraged companies. The part of their portfolio included Radio Shack and American Apparel, including Media General, which is a company they bought for, I want to say, right around 85 million in 2010, and ultimately sold for 1.6 billion in 2017. They built the casino you now know as Bally's, which was originally a Rhode Island casino that was purchased for $100 million, and they now own Bally's, which is valued at up to $7 billion. And so learned a lot about that. Served on public boards as part of my role there too. I served on the board of National Cinema Media, $450 million a year advertising platform, where I served in the audit committee as well as the nomination and governance committee. I currently serve on the board of Hot 97, which I probably should have led with. Honestly, who cares about this boring finance stuff? I serve on the board of Hot 97, where I was the audit chair for a bit. And I'm a finance structuring guru. And so as I thought about what would be helpful to bring to the table, you know, my real foundation to wealth honestly came from home ownership. Jamaican immigrant, grew up in Bed-Stuy. When we got here, 12 of us in a 2-bedroom, 1-bath in Crown Heights. It was great. And then just did really, really well. But I didn't come from any money. No money was given to me. Certainly no white man was giving money to me while I was working. And so I learned how to take the bit I got from the Army and invested a bit, grew it a bit, and then use that as a down payment for a home, where I was able to get an alternative finance structure in that. And let's get right into the spreadsheets. Or actually, let's get right into the affiliate website. Also share sound. And then we'll get into the spreadsheets. So here is the WealthStack platform. We built, and WealthStack is an all veteran employee, all veteran owned company. I'm the majority shareholder of WealthStack. And we created a platform that takes the financial education and insights that I got over the course of my career and breaks it down in a format that's easy for people to understand. And so it does it in the form of a simple IRA for small businesses. We go to small businesses that have employees of less than 100 employees, and we offer them our solution. Our solution allows them to sign up in less than 4 minutes and get a simple IRA. And when they do so, we are able to track where it originated. Now, by going to this site here, wellstack.us affiliate, start earning, you'll be taken to this page. Last your first, last name, email, you'll create a password. Then you will be directed a process to connect to PayPal. That's where the money will be sent to. And then you will get your own link. It'll be www.wellstack.us/Tawana. That one's going to be taken real soon. And then you send it out to your friends or any businesses that you meet or prospect to or network. And that's the beauty of this. That link can be on your Instagram, your LinkedIn, your Twitter, on a flyer. It can be anywhere. And as long as the user starts there, then it's automatically tracked. We use Stripe to aggregate all of our financial data, which is a strategic advantage in many ways as far as obtaining alternative financing. More on that in a bit later. We use Stripe, but Stripe connects to everything. So your URL, which is going to go to the small business owners, and those small business owners are going to sign up for the WealthStack platform in a registration process that takes about 3 minutes. And then their employees are going to get an awesome app. Them using that URL is going to be automatically tracked. And when they paid, you get paid. It's all connected through Stripe and PayPal to make it incredibly convenient. There's no human involvement. The money is just going to show up in your account for making it happen. That URL is yours from the second you use it. It'll work then. It'll work weeks later, months later, years later, but don't wait years. Get the word out about the tremendous platform we built. At this point, I want to take a little bit and kind of go back. I went back to my old housing models. So these are the ones that I use for myself. I'm going to zoom in a bit. These are the ones I use for myself. Can everyone see? Tawana, can you see?
Yes.
Okay, cool. Tax rate, which is important. You got to figure out what your tax rate is going to be. home price, the percent you want down, mortgage, and then mortgage rates. I then I'm calculating property taxes depending on the rate, which varies a lot by state, and then your monthly amounts due. I'm factoring the tax deduction of the interest to calculate the effective real cost to the homeowner. Now, I've always found this an incredibly helpful exercise throughout life. And my first home, which I purchased, which was 560 State Street, I'm sorry, 556 State Street. Jay-Z rapped about 560 State Street in New York because that's where his old stash spot was. I bought years later right next door. And I bought that home for a lot more than I at first thought I could afford. But when I sat down and I built a spreadsheet like this, and I said, okay, I'm going to find a lender that lets me do 10% down. Okay, I'm going to need to get this amount down. And then I started looking at it and I was like, well, if my rate is this, if this is my monthly amount and I can get a roommate in there because it was 2-bedroom, I was like, actually, I could totally do this. I can afford a much bigger house, and that house ultimately doubled. And so having leverage, I borrowed 90% of the home purchase, and I bought a way bigger home than I otherwise was thinking of, and that home doubled. So that combination of leverage and risk allows for significant wealth creation. Now, there's programs out there, the FHA have, which allow you to purchase a home for 2% down. I recently bought a home. I'm a veteran. I went to West Point. I served in the Army for 5 years, service disabled vet. And as a service disabled vet, I was able to get a 0% down home, 0% down mortgage. And so, so taking a look at this, what is this telling me? The average home price in America is $345,000 is what Google tells me. And so that means, and today's average mortgage rate is 7%. I don't know what typical property tax rates are. They're so crazy everywhere. I live in New York and California, but I know that's not normal. So we'll go 0.5% now. And then, but there's tax deduction around that. And so there's some benefit. So looking at what's my annual interest cost. And so these are formulas. We talked about iPayment, iBonds. So these are formulas in Google. I'm a computer science, Excel programming, finance guy. And so I love this stuff, but I think Google Sheets makes it comparatively easy to lay out their formulas. And so I realized this could be helpful to people, I think. So I'm going to post this on the WealthStack website with our resources so that you can get into the sheet and start to get your own copy and play around with numbers sort of thing. And so what you might see is, well, you know what? If I'm looking at a house and it's $400,000 and I can get a FHA loan and maybe get, 5% down on it, I'll have to come up with $20,000. Maybe friends and family can even help. And then my monthly payment's going to be $2,659 for the next 30 years. And then you can start to plan out and say, well, you can get a roommate too, and kind of start thinking through the numbers. And, you may find out that there's a housing opportunity available to you. And so it's always helpful, I think, to go through the numbers, and that I often find the answer isn't what my intuitive instinct would have been. You know what I mean? There's kind of something more there. And then especially when you're talking about a home price, there's a big difference between 350 and 540 in what you can buy.
Mm-hmm.
And so there's a real big difference, whatever city you're going to. It's a real big difference. And so as you're now starting to think through, well, what are the levers that are available to me? What are my lenders? What are the structures? What are the options out there? I remember, and there are a lot, and, if you do the work, you'll be alone. People won't do the work. And so opportunities can be had that way.
So let me ask you a question, Andrew. Let me ask you this.
Sure, please.
It kind of in the same lines of what Dr. Shree was talking about. We're hearing, I know I've been hearing, now's not the time to buy a home because interest rates are so much higher, right? And so I am currently a homeowner. I would love to buy another home, right? But I'm sitting at, I think my interest rate currently right now, sitting at like a 3.75 on the home I currently own. To see 6.7% interest rate, right? For someone who already has a current home at a much lower rate,
let's
nothing
take
that
a
would
look
make
at
me say buying a home is going to be helpful for me.
Let's take a look at the numbers. And that's another helpful thing about the model. We've got, at $1 million, every $1 million at a reasonable property tax area, not like California, is going to cost you, right around 6.5 at 6.7. And so at 3.5, you're down to 4.7. And that's a material change. Now, the thing that I would say is that if there's some forced sellers, you can always refinance down. It's not hard. And I don't know what's going on with interest rates. I genuinely don't. And if you ask me what I think will happen with them, I can't help but conjecture, and so I will. But I do that knowing that. Look, I remember my mom bought the house back in Coney Island, and it was like 11% interest rates, and she had good credit, and that was normal. It was the norm. Interest rates on average have been higher than here. In fact, we can do this historic.
So, Dr. Shree, what are your thoughts? I mean, we know that home ownership is one of the fastest ways to build wealth, right? We know, and we also know in the Black community that's where we lack, right?
Exactly.
But the media does put a little fear in you a little bit, right? To say now's not the time.
It does. But when you hear that now is not the time, and we believe it because the housing market, when you look at hotbeds, sales are declining because folks are seeing, interest rates go up. We're told interest rates go up, don't buy, wait till the interest rates come down, because you don't want to be upside down in your on your mortgage. And that is legitimately true when you are saying, we're talking about like, this is my first home or this is my primary residence. That would be true. If you're looking at property for investment, that's a whole nother issue, and that's a whole nother different conversation. And so, yes, interest rates are going up, but if you're investing, that might be, they're depending upon your situation, now might be a good time to do it. So I will say what every economist say whenever you ask an economist a question, the answer is it depends. So it depends on, are you seeking this home ownership for those who don't own a home? You're looking, you want to own a home and you don't have one. Andrew has just shown you a way that you can, even with rising interest rates, get into a home. There are government programs, government assisted programs, income-based and non-income based, that can help you navigate that so that you can achieve that goal. If you already own a home and you're looking at real estate to invest in, even with rising interest rates, it is possible. And so it is doable. You just need to make sure you have the correct information, and that information is custom to your situation.
I think that was excellent context. And so this is a tool in my toolkit. I'm not a macro investor, but I honestly just decide where I want my money at any given point in time. Most of it, and sometimes it's the market, and it was the market for 2016 to 2020. And in 2020, I said I'd rather put into creating a company, and I made a business, and I thought this is a better time to own a business and to be in the market. But it just situation depends. Now, my neighborhood in Bed-Stuy, not Bed-Stuy, excuse me, Borum Hill, on State Street was going through gentrification, and they were just about to build a Barclays Stadium. And because I knew they were going to build a Barclays Stadium, and I knew it was gentrifying, I knew that this was going to go up. And so because of that, I said, because I felt really good that the future value would be higher, I said, you know what? I'm going to go out on a limb. I'm going to put 10% down and get the biggest one I can, right? I'll like take risk here, get the biggest one I can, and put all my investment in that. And like, that was all the money I had from being in Baghdad for a year. Can't spend much money in Baghdad. And so even if you wanted to, there's nowhere to go. So I saved it, invested in some stocks, kept that, and I used that. That was my down payment, because with a 10% structure, putting together a little money from the family, all of a sudden you're able to get something pretty big. And because you knew the gentrification and the all of it was going, in that situation, pay the 6.5% interest rate. You know what I mean? That's pay that rate. And then watch it. You can refinance very easily if the rate goes down. But the other thing I was showing is like, guys, rates are like still lower than normal.
Less than 10%.
I mean, like
less than 10%.
What I think happens is I think they're shooting themselves in the foot by going this hard, and they're going to accidentally get everyone all riled up with the economy. I think the Democrats don't really care, but then they'll start to feel a little bit, and then they're going to be like, save me, save me. This is what I like sort of think will happen. And then I think they're going to ease up and lower the rates. But like, I mean, inflation.
I can tell you as an economist, the groups and the circles that I'm in, again, the interest rates are going up, again, cyclical, and it will go down. We have a bet as to what the rate will top at and when it will top. And I can tell you that in our circles that it's top.
She's not going to publicize that publicly.
She's not going to tell that
be
part.
A member to hear that.
She's not going to tell that part.
we have bets going as to how far it was going to top and when it will top out. And I'm just going to say that interest rates are cyclical. And even as it's going up, know that it will eventually come back down too. So,
yeah, I mean, I certainly wouldn't bank on lower ones in the next little bit. I just wouldn't. You know what I mean? So I wouldn't hold out for lower interest rates in buying a home.
It's going to go up. It's still on the rise. It's still on the rise.
Yeah, I mean, I might, now what I would really try to do is I try to be opportunistic. Where is there both the gentrification, because, Gentrify, still Black owned if I own it. So where is the gentrification going on? Where are the Starbucks coming in? Where is it getting better? And then look for forced sellers there. Part of all this disruption is like people ain't got dough, and all of a sudden they got to sell. Buyers are very hesitant right now, and so I think in about 9 months you're going to be able to get some deals. I actually do think that you're going to be able, if you bring your money to the table and you can pay the interest rate, which look, high interest rate, but if you're putting 2% down, I mean, like, check the numbers out. It's not the rate you want, but you can live with it. And if the rate goes lower in 6 months, you can refinance in like less than a week and get the new lower rate. No big deal. You may not be able to get that house though. That house may not be available at that point in time. So you may as well kind of, do the numbers and run it, is I think the way to think about it. But I do think that if people are in denial, you're right. People are spending their credit cards, are in denial. people start getting shook and start to, need to downsize the home, and it's in the right area, and everything's going the right way, I think there can be some value there, maybe.
Right.
I don't know.
You mentioned
I
two
want
things that
go
I
ahead,
want to say
Dr.
this
Shirley.
real quick. You mentioned two things that I want to make sure that our audience hear. One, you talked about how much risk you were willing to accept.
Yep.
And so when we're talking about, whether we do real estate, whether we do the market, whether we invest in businesses, you need to, you need to know what you're willing to risk as a household. And then the other thing too was you mentioned the fact that you know how to, depend upon where you are, what situation, whether you're going to invest in real estate or whether you're going to do the market or whether you're going to invest in business. And so you need to also not only understand and appreciate your risk, but also know what you want your portfolio to look like at any given period in time. And it might be heavy on real estate and a little light on the market. At some points, it might be heavy on the market and business, and light on the real estate. So again, it's not just we're going to buy and hold. It is that, but it's also knowing how to navigate your portfolio so that you do get the biggest return on your investment.
I think that was great. We should work together as a tag team duo, because I think the way to really create value here is wait till someone gets crushed. Wait till someone has like an adjustable rate mortgage on like a great property in a great area, and like they're just not going to be able to hang on like another 8-9 months. And so if rates stay here for like another bit, and so you can use that time to get the credit score as high as you can.
Mhm.
Every little bit really, really, really matters. You can get it at 700, but you'll be way happier at 750, way happier at 800. So get the credit score as high as you can get it, paying down debt, doing what you can do, figure out what lender is going to be there, start getting familiar with the market, know what you're trying to do. You can already kind of be in motion so that when like that foreclosure's coming, you can roll up. You can roll up. And like no one's gonna be paying the 8-9% mortgages then. Ain't nobody gonna want to do it. And he's not gonna enjoy it. And like you might get 20-25% off the price. So again, same tool set, same spreadsheet, but by being mindful about where they're the greatest opportunities in the market, there it is. Now I would say that if you go, Andrew, where do you think you can make the most money, stack the most money in the market? I'm doing it. The digital tools out there are amazing. It's amazing. You can create a business from your sofa in the next like week and a half. That's like generating revenue on its way to being something big. Anyone can. The tools are there. You just pay all these people $29.99 a month, put it together, get a landing page, and the links worked, and you're off.
Yeah.
And that's how the megacorps do it. And you can do the exact. We all go to Facebook. We all go to Google. We all pay for our keywords. You can too. And so you can create a business right now that's doing a couple $1,000s of revenue of doing whatever it is that you love. I love helping people get money from banks, especially Black people. I love that. So I made a business out of it, right? And so doing whatever. I think because of the digital tools available right now, you can create so much with a lack of capital that where you do something you love, and then there's ways to monetize that. I'll show you guys. I'm pretty sure I was done, but I'm still taking over. I'll show you guys WealthStack's 36 ways to finance a business. That is 36 ways in homage to the Wu-Tang Clan. And so, beginning with all personal savings and HELOC, but going all the way down to ARR-based loans. There's these guys. They'll start writing you loans at $10,000 a month of recurring revenue. They log right into your Stripe account. Remember, I mentioned Stripe in the beginning, and that's part of why we use the payment. They'll log right into your Stripe account and they'll tell you how much money you can get. And I'll tell you, it starts at 10K, but you can start from being on your sofa, figuring out what your gift is, what people love that you're really good at, and go to first Upwork, Fiverr, start making some dough there, get good, build an app, build a no-code app, and get into it. So I think this is a groundbreaking time for business creation in a lot of different ways, and with opportunity zones, which are a structure that's actually, you can't do it yourself. You will need a lawyer to help you, but it's not that hard to do. You set it up, any capital used to invest in your business, a few $1,000s you take from wherever is tax deductible, it's a lower tax bill. And when you sell that business or real estate investment that you put in an opportunity zone, if it's after 10 years, you pay no taxes, none. So if you put into it a few $1,000s and you sell it for $20 million, you know the government a single penny. So there's a lot of structures, there's a lot of help, there's a lot of resources, there's a lot of software tools that allow you to create something. And so that's where I put my dough, in creating the Wellstack platform. And so I think it makes a lot of sense for our audience as well.
I have so much to say. I've been writing a list now. The first thing is with regards to buying homes. 2/3 of white wealth is in their homes, their homes that they own. So we have heard for many years that Black wealth is usually 1/10 of white wealth. So white wealth right now is 180,000, for example. Black wealth is usually 18,000. Most people, if you are able to buy a home and pay off that home in 30 years, you would have caught up with white wealth. You know, if you do that, plus have a life insurance policy for your children, you know, so what I'm trying to say with this is like the ball or the bar is not as high sometimes as we think it is. The second thing is that refinancing your home. So I bought a home in 2018, best decision I ever made, financially, best decision ever made. Now I'm starting to get those postcards saying, if you want to sell your home. And I laughed with my mom, like, wonder why we're getting this. Well, then I realized we have so much equity in our home now that people are starting to send us little postcards. Hey, if you want to sell, I mean, they target a neighborhood, but especially if you have equity. So what Andrew was talking about, let's say you buy now at a rate of 6, right? You will have the appreciation as well. So if that house is, you know, 500,000 today, but in 4 years, it's going to be worth, I don't know, 700,000. Well, you've got 200,000 in equity and you've got the amount of principal that you've paid down as well. So then you're able to decide, do I want to refinance at a lower rate, cash some of it out, you know, blah, blah, blah. So what it really does is it gives you choices. And I think the one best thing with being a wealth builder is that you want choices. You want choices with your time, with your money, with your career, things like that. So that's the second thing that I had. The third, my suggestion, I am not a financial advisor. Cherie does not sign adjustable rate mortgages for her home, especially her primary residence. My suggestion to you is if you're thinking about doing an ARM, to definitely talk to a financial advisor about that, because I do know people in the last recession / interest hike that lost their homes due to those ARMs. So I told you I had a lot because you all said so much. With regards to what Tawana said about the news is telling us, you know, not to buy a home. I don't listen to what the news says. I look at what the rich people are doing. even though the news is saying don't buy a home, that's not what the wealthy people are doing. They're buying anything that they can snatch up, any land that they can buy, any, trailer park that they can buy, etc. There's a guy that I follow online. He was telling us, y'all shouldn't buy homes. You shouldn't buy where you live. Meanwhile, he owned his home with his wife and his family as a white man, telling Black people, having Steve Harvey and Kevin Hart and all of these big boys on stage at a big conference with Snoop Dogg and whomever telling us not to buy homes. So I'm just like saying, just be aware of these people who are telling us one thing and doing something else, because it happens a lot. The final thing is, we had a session with a panelist that had 3 or 4 panelists that came on to talk about the NACA program. Oh, now I'm forgetting what NACA stands for, but it is a housing program where they help you with your down payment. So don't let the fear of not having a down payment scare you. It's in the Knowledge Center, and they actually, I asked the hard questions as well. What does it take to actually go through the program? But if you are concerned because you're like, I really just don't have money for a down payment, how am I supposed to do this? Then consider the NACA program and also
it stands
the USDA.
for Neighborhood Assistance Corporation of America.
Perfect. Neighborhood Assistance Corporation of America.
And it's NACA.com, NACA.com.
Yes. And then during that session, there was a gentleman who also talked about another program, and there's the USDA program as well. So there are programs out there that can help you purchase a home with little to no money down. So do not let that be the reason why you cannot purchase. We also had a few months ago, Tawana, one of our members that bought a home from the county. It's on our YouTube page. I apologize, I can't remember her name right now. I can see her face, but I can't remember her name. But there are programs. Check with your city, check with your county, check with NACA and places like that. Monetizing, Andrew talked about monetizing, getting your business together. We also had a great e-commerce session with Lakina. She came on to talk with us. Really listen to that session if you want to do anything with regards to e-commerce as well. And we've also in the Knowledge Center had a couple of great sessions about opportunity zones and like how you can raise a fund and things like that. You can, with opportunity zones, you can get money for not only for real estate projects that you want to do, but also for businesses that you want to start and grow as well, or you can raise an opportunity zone fund. So I wanted to make sure that everyone knew that those things are in the Knowledge Center. And a lot of it is also on our YouTube public page as well, but some things are just for members.
I want to check out that opportunity zone in the Knowledge Center.
Absolutely.
That sounds
Yeah,
really.
you can just, when you go into the Knowledge Center, go into the search tab and just put opportunity, and everything that we have with opportunity zones. The really good one is Charles McCutcheon. He's raising, I want to say $75 million fund or something like that, but he talked to us about how we can do it, and he gave us his information. He wants Black people all across the country to set up these opportunity zones, and he will like walk you through everything that he's doing in his city, and he'll mentor you on how to do the same thing in your city. So, we get a lot of supportive people here within the 10K project that are willing to help us get to the next level of our financial lives.
Great.
Yeah, we've got a lot of good stuff. Mercedes Griffin Forbes did the Airbnb session, teaching us how to leverage these homes that we're buying, right? And use them for Airbnb opportunities. So it's a lot of great information that's already out there in the Knowledge Center. So for those of you who are members, please take advantage of it. You may have missed that session and never circled back around to it. We keep them out there for you to have them. For those of you who are not yet members, consider that, this session, obviously, I believe was very helpful for you, but consider becoming a member so that you have access to all of the previous things that we've talked about, that are equally as powerful as the information we've shared here today, because it really is the roadmap for success. And you put all of these things together, right? And they are the roadmap. So we need to treat them as such.
100%.
I love the comments in here. People are saying yes, and corporations buying up total blocks of homes like BlackRock. Ebert is saying that. T. Terrell, yes, it is Grant Cardone. And I was a big Grant Cardone follower back in the day, but when he started pivoting and he started really targeting Black Americans and saying, you shouldn't own a home, you should rent where you live. Yeah, I just didn't like that. So, and Ebert is saying the super rich are gaslighting people, do the research, pay the mainline media no mind. Yep, Ebert, you are right. I mean, I look at what they're saying because we, within the 10K project, we do get these types of questions. We do get people coming to us who believe the media and believe that these corporations have our best interests at heart. So, I do remain aware, but we also want to bring people to you, that are here to be helpful for you. And anything that you want to do, if the 10K project doesn't currently have access to it in the Knowledge Center, then let us know. We'll go and we'll try to find the best experts possible to bring that information to you as well.
And just as a kind of an addition to that, when you go to wealthstack.com, Andrew has a ton of information.
US.
Sorry. So talk about that, Andrew. I mean, you've got an amazing library of great information.
Absolutely. We've got over 200 blog posts, which provide a detailed, in-depth description of all the different ways you can create wealth. And so I'll pull up some of them now. Thank you very much for that lead in. It's great. And so I built WealthStack because I was a poor immigrant and was able to create wealth due to the knowledge I gained at Columbia Business School and on Wall Street. And I just didn't see that information getting out to people. And so because of that, I thought, why don't we put it in ways that people can understand and make it available for everyone? Here's a brief sample of our blog content. But we have 200 of these. And so you're able to find the best tips that are able to help your particular situation and get help. Of course, we've got significant amounts of I have two kids, and man, my youngest just loves cars. We have to listen to Life is a Highway all the time, all day. We've also got a tremendous array of videos here as well. You can learn all about compounding, paying off your student debt faster, understanding your credit score. And so you're able to access these videos through both our YouTube channel as well as really our WealthStack app. So you can go and download the WealthStack app now in the App Store to both Android and Apple and get access to the education piece here.
Wonderful. Thank you for sharing that, Andrew.
Thank you.
Cherie, any final what are our final statements? This was good.
This was excellent. I mean, I think the biggest final statement is to take a self-assessment if that's where you feel you are right now. If you need assistance, we did not mention it before, but we do have our alliance with Freeman Capital. They are certified financial planners. They actually are more like financial coaches than anything. You get 6 months of personal one-on-one um, consultations with them where they go over your mindset, and then like you develop a plan for what it is you want your wealth goals to be, and they work with you to actually help you achieve those wealth goals or get you, steps closer to it. So, assess and then do, and then assess again and repeat, but don't stand still for too long is going to be my advice. Don't stand still for, it's okay to assess, but let's not have analysis paralysis either.
I think that's great advice. I want to post the affiliate link one more time. And I want to say that I'm helping people raise loans. We collect a 1% fee for any phones we help provide. And if you refer a business to us that gets a loan, you get 10% of that fee too. So those fees can end up being pretty considerable. And so in addition to getting $200 for every business that you sign up to use a WellStack benefits portion, if that business says, Andrew, I need $5 million, I go, okay, show me your financials, build a model. Here's the right bank for you. Here's $5 million. They pay me 1%. That's 50K. I pay you 10%. That's 5K. And all of it happens via this affiliate link. So wouldn't it be great to connect your friend's business? That business gets a few $1 million. You're getting checks. And so we deliberately created win-wins for everyone, including the employees who are getting access to great content, help, budgeting, coaching, and all of it. So I'd love to have as many affiliates come from this as possible. I want to be sending millions of dollars out. I really do. And I can't think of anyone else I'd rather be sending it to. And so go get your own link, please, so I can send you some money for signing up businesses. Any business with less than 100 employees is a great target. And if they have over $3 million a year of revenue, I can help them get access to financing.
That's wonderful.
Dr. Cherie, and don't forget to unmute yourself.
The only thing that I'm going to tell you is that, look at what's going on, pay attention to the economic numbers, but do not be scared or frightened. We've gone through difficult times, and in this instance, I want you all to not necessarily look at these as an economic downturn, but an opportunity for you to do different so that you can do better. So take the information that you are hearing, not only in this session, but in all of the sessions, assess, and then start moving so that when you move different, you will get different. And that's what we want for you, to get different.
Yeah, I can't top anything that just was said. Just do something. Just something.
Well, the big thing we want you to do is tomorrow night, come to the Bet on Black
Bet on
Pitch.
Black Pitch tomorrow. Tomorrow's Bet on Black Pitch founder is, let's see the teaser I can give you. It's a founder who started her business when she was, I think she was 13. She's older now, but she was 13 at the time. Actually a product I've had, and it's really, really good. I think that's enough. Can you imagine a Black female founder that started a business at 13 and is still running said business successfully? And she's not 13 anymore. So that goes to show you there's longevity and all of that stuff. And she's amazing, just like all of my other founders have been. But tomorrow, 8 p.m. Eastern time, I'm going to be here. You might as well be here with me.
Yes. And I do have to apologize. I had to postpone the Make Money as a Speaker session. So that is been postponed until August the 2nd. But if you haven't gotten the email yet, you'll probably get it at 8 o'clock this evening. I didn't want all the emails rambling together. So I do apologize if you were planning on coming to that. Come August 2nd at 6 p.m. Eastern time for that session. Okay. All righty then.
Okay.
Andrew, Dr. Sharif, thank you so much.
Thank you
Everybody
guys
put
so
an
much.
exclamation point in here so that they can see all of your love and support. And again, we want to invite anybody who is not a member of the 10K Project to join 10K, the10kproject.com. I hope y'all see all of those exclamation points, people saying awesome. So thank you, everybody.
Thank you, everyone.
We will see you tomorrow night.
Have a good
Take
evening.
care.